Hey guys, so happy Friday. Hope you guys had a good week trading. So we finally broke the Friday curse. I've had some struggles on Fridays lately, but all right, so let's take a look at the market here. So this market continues to be very, very difficult to not only trade, but just to figure out long term where it's going to go. So if you remember back here, it looked like we were going to put a top in and that would then bring us down to try to gap fill down at 422. However, we bounced and then it looked like it again, and then we bounced again. So yesterday I was very bullish for today. Now, I almost got the price target I was looking for, which was 433. However, we actually ended up really rejecting and impressively, which think really says something about the markets, closed under 430 again. So this would now be the fifth, basically the fifth attempt to get to 430 and close below it, or close over it, I mean, in the last basically week of trading. So interestingly enough here, we did close out this really nice evening doji star reversal candle here. So with this reversal candle, we also put a new supply in at 429.2. With this new supply put in here, you can see we now have three supplies in this basically 428 to 430 range. With three supplies here and the fact that we are now imbalanced, which means we put a supply in lower than we closed, I am very much so bearish for at least Monday. Now, we have CPI coming up on Tuesday. As of right now, the numbers I'm seeing, I'm still waiting to see if I can get the Bloomberg numbers. If I do, I'll try to post them on Monday with a more accurate possible range for where CPI will be for Tuesday. But as of right now, the numbers I'm seeing are extremely bullish. There is even a chance we could see a 3% print on Tuesday for year over year CPI. That would be incredibly bullish to see a 3% print. Markets would run with that, saying we're only 1% roughly away from a 2%, which is the goal for the Feds. So I also noticed on Wednesday we are still pricing in a more chance of a pause than we are 25 basis point hikes. I think that is incredibly incorrect. I truly believe, regardless of what happens with inflation on Tuesday, I really think we're going to still see a 25 basis point hike. Why? Mostly because Jay Powell, not one time at any of the pressers or little meeting things he has in the meantime, has said that we are going to pause. The banks are very strong right now, which means that pretty much, honestly, in my opinion, in March, the reason they didn't do a 50 basis point like they should have is because the banks were weak. And even last FOMC, there was a chance that we were going to have a pause, but that pause only was based pretty much on the financial system. Banks look strong right now. I mean, deposits are up. Everything looks back to, strength. So with that, there's not an excuse not to rate hike. Now, there is something to be said about, well, if we're already down in the 3% range or even low fours, and Cleveland Fed next month is projecting us to be about 3.2 to 3.3% on year over year, why would we continue to hike? So, couple things on this. First off, I believe, as far as as of right now, this is the first time in history that inflation would come down in basically a straight line, which is almost impossible. Meaning there has not been a single rebound this whole time. Yes, there was one time where we plateaued, but we did not rebound, meaning that the next year over month print of year over year was higher than previous. Every single time it has come in lower. I believe there was one unchanged in there. So, with that being said, a very great, reason to continue to hike is that you could say, well, this, obviously is the first time this has ever happened. It would be pretty unlikely that inflation is going to continue to go down another 2% without basically rebounding. There's also a lot of people that like to quote basically going from 9% inflation, which was roughly our peak, to 5%, even 4% isn't that hard, but to get through the goalpost, to get to that 2%, even being at like 3 to 4%, many analysts and economic people basically say that that is really where the struggle comes in. And that's basically where markets are going to see the most struggle getting to that 2%. So basically, my thoughts are here is Jay Powell is going to come out and say, like, look, financial system's strong. Inflation is still not peaked technically. And core inflation is still super high. I mean, if you look at core, that is one thing that has not really come down. Now, granted, this month it is expected that core year over year will come down just a little bit, but it's still pretty high in the mid 5% range. Month over month core could accidentally come down a little bit too. But yeah, I mean, it's really tough there. But I do think Jay Powell's going to come out and say 25 basis point hike. He's going to basically say that there's no reason to stop hikes yet. And I also think that he's going to still say no rate cuts by end of year, which means we very well could still see some more rate hikes. Now, basically what I'm basically looking for here is that Monday's going to be a retrace, probably try to look at this 426.5 area. Tuesday, likely I would not play anything swing wise. We haven't really had a massive win on a CPI swing in a very long time. It just isn't paying out anymore. The moves just aren't that good and premiums are just priced too good. So most likely we're going to come back up, try to maybe get to 430, but that's where it's going to be really interesting. Tuesday can go, or Wednesday, FOMC could go either way. We could see the massive pump, even if we get a 25 basis point hike, markets could do kind of like what they did back in May, where in a couple other months, where we get this massive pump on FOMC, and then basically the next day we gap down hard and we dump from there. Or, much like the last couple FOMCs, we very well could see a bullish run up into that FOMC at 2 o'clock. And then generally once J Powell starts speaking around 2:30, but sometimes for some crazy reason around 2:45, markets just like instantly flip bearish and we see pretty much the bottom fall out in a red day on FOMC. And that generally leads to at least one or two more days of retracement on SPY. It's basically what I'm looking for. On a weekly time frame here, we're just riding up in this blue bull channel. We're right in the middle of it here. It's tough because resistance is all the way for next week up at 442 and supports all the way down here at 419. So you can see this is really, really tough territory here. Now we do have a doji candle here. This is technically an evening doji star, which means we could come back down to this 422 support, which would give us that daily gap fill. However, this is a really tough place here. We did get over the weekly high twice now and close the candle over it. So now we're starting to look at the April's high. This was August, and now we're getting up in these April. So very, very tough here. In my opinion, though, when you look at this daily, this is like, or weekly, this is very clean picture. If you go back, zoom out just a little bit here, going back here, this is the low in October, this is the August high. This is just a massive, basically rising wedge, and you can even put a support, and if I do it, I'm almost positive it's pretty close. Yep, so here would be our bull channel, basically it's just a very slow burn bull channel, which means, at some point we could still come back down to the 390s. But in general, very just much so a bullish run up. I would not short SPY until we lose this blue channel. This will be your opportunity once we lose this support, and it likely will try to come back down somewhere in this like 398 to 405 area. So I'm not going to talk about futures on TradingView. It rolled the contracts, and I hate that trading view the way it does it, because basically you get this massive gap up even though that's not what happened. Now they do have this button where you can adjust it and then it looks much like my Thinkorswim does. But the issue with that, if you look at the candles when I do that, all of my lines and my channels and everything like that are just ever so slightly off, and I don't like that. I like to use the actual non-adjusted. So basically what I do on futures is I generally just don't really do much with the futures daily or weekly for usually about a week. Basically what needs to happen is we need to come back down and at least touch 4,300, and we need it, and then from there we pretty much are back to even, and from there we can kind of start basing it off of that more and start having some more clear levels. But that, just keep that in mind. So I'm not going to be talking about futures. So now this is really frustrating for me. I don't know what happened, but on my VIX, and this is really, really interesting. If someone else has this, let me know. But on my VIX daily here, and I have tried to restart my trading view a couple different times now. I've tried to clear some data, and I just don't really know really what happened. But basically, if you look, this is my Wednesday, June 7th candle. I have no Thursday candle. I don't know why I don't have a Thursday candle. I've tried to change the settings. I've tried to change my time frame, but for some reason I just have zero data and I have no daily candle from Thursday. So that really kind of throws my stuff off here, because we actually did, in my channel, my thing moved up there. So we did wick through the support, or the resistance of this blue bear channel that we've been in since May. Now, something else to keep in mind here is that we did put in a new demand. Now, I talked about this in my written TA, and if you didn't get a chance to read it, I really think you should, because at least the VIX part towards the very bottom. So I basically backtracked, and I did this yesterday with SPY and QQQ on when it puts in a demand and what happens the next day. And basically it's pretty explosive. So on QQQ and SPY, basically you put a demand in and you're basically looking for about a 1.5% push up, and that happened. Now on the VIX, the last 9 times a demand has been put in, and this also goes for you guys that say you cannot TA the VIX and that you can't do supply and demand on the VIX. I completely disagree, and this is why. So the last 9 times, the VIX on average has bounced 25.6%, and SPY at the same time has fallen on average 2.38%. Now, that would mean the VIX is going to retest about 17, and look what's at 17. This is a major pivot point. Look at this level. We chopped in this area a ton in the middle of May. And that would put SPY right around 421.7. What's that 420? Look at that. 422 gap fill. So there's a good chance that this week we could gap fill 422 on SPY. I personally was very tempted to swing some QQQ puts basically on a daily time frame. I don't know, this daily isn't up very good because I mostly chart on Thinkorswim for QQQ. But it's basically what you see here is that we're in this upper bull channel, and this 355 area right here is just massive resistance. So with this massive resistance, and then we have pretty much strong support at 349, and this doji reversal candle right here, I'm looking for a retest of at least the 8 EMA at 351, but really my target for next week on Monday, really, for QQQ is 350. I'm pretty bearish on Monday. I really do think we're going to see a retrace. However, with FOMC and CPI, I don't think it was worth the swing. So basically for here, what I'm looking for is I'm going to be looking for the VIX to go back to 16 until we get a new supply or we touch the 16 level on the VIX. I would not be going long on SPY again, though. I do think this is going to set up for a retrace. Looking at Bitcoin, Bitcoin has not done a whole lot of anything. We are in a bit of a breakout triangle here in this downward bull channel. So basically you see we have the bigger bull channel in blue. We have the shorter term black bull bear channel. I'm sorry, I said bull, but I meant bear. Blue bear channel, black bear channel, and now we have a breakout wedge. So tonight, this candle is going to close here in about an hour and a half. We're going to break support of this breakout triangle. Breaking this support And more importantly, if we can break under and close under 26.3K this weekend, then we should more likely than not come back down to at least 25.7K. And I still have a greater target of 25K on Bitcoin. That would also coincide perfectly with a market sell-off based on the VIX, SPY, and QQQ and what I'm seeing. So, all right, guys, I hope you guys had a great week trading. I hope you guys have a good weekend. I will see you guys Monday.